We are launching the Savings and Investments Union strategy. This represents an opportunity to take a step forward for Europe's financial and economic future. This is a defining moment for the EU, one that can make our economy stronger, more competitive and better prepared for the challenges ahead. The reality is that despite the EU's enormous resources and achievements, Europe's economy is underperforming. This is not new, and the global landscape is shifting faster than ever, and we are lagging, or risk being lagging further behind. We are facing both a challenge and an opportunity for the EU's huge potential. If we fail to act, if we do not respond with urgency and collective ambition, we risk losing out on our citizens' and businesses' expectations and our place as a leading global voice. And this is not an option. The strategy for the Savings and Investments Union provides a path forward to drive economic growth and prosperity in Europe with the development of the single market on finance. My vision for a successful European Savings and Investment Union is an EU where households have more opportunities to save and build wealth for the big events in life. An EU that has a faster growing economy with more and better jobs where companies strive and innovate. And an EU with enough investment flows to meet the needs of European companies, including those which are critical for our strategic priorities, like the digital, climate and social transitions, as well as security and defence. Our goal must be to make investing in Europe the obvious choice by creating the conditions that will allow offering attractive opportunities, competitive returns and low barriers. And to ensure we get there, we must act swiftly and decisively to deal with current inefficiencies. This will require dealing with topics that have been put aside for too long and will tackle vested interests and barriers. We must see real change in the functioning of our single market for financial services and its ability to finance projects throughout the EU, from the local companies to pan-European corporates. The SIU will not be built from Brussels alone. It will require joint efforts from EU institutions, member states, as well as the private sector. It is a shared responsibility. And most importantly, we must put our citizens first. By prioritising household wealth creation, we can give them more opportunities and spark a new wave of capital throughout Europe. Growth isn't just a byproduct of the Savings and Investments Union. It's a central objective because maintaining Europe's economic power is also a matter of our collective security. The Savings and Investments Union is a sector-agnostic enabler for the financing of all the priorities listed in the Competitiveness Compass and Rearm Europe. It aims to make the EU's financial market deeper and more liquid, and thereby more efficient in channeling financial resources to productive investments. It's about strengthening Europe for the challenges of the present and the future. It's part of our Readiness 2030 strategy. There is strong political ambition for more public investment in Europe's strategic priorities, yet public funding alone won't be enough. Recent communications from the Commission set a clear business case for our industries and our economy to strive. These form the basis for our political commitment. This set clearly our priorities and our direction of travel. Creating the right financing ecosystem in Europe will facilitate connecting those priorities with citizens and businesses. We must ensure that companies have the best possible path to bring solutions, from research and development right through to delivery. We need to improve how we mobilise capital in Europe. The Savings and Investments Union has been designed to allow this financing ecosystem to emerge. Our strategy is based on 4 pillars. The first is citizens and savings, the second, investment and financing, the third, integration and scale, and the fourth, efficient supervision in the single market. Its implementation will be guided by the imperatives of simplification, burden reduction and digitalization, and it will also rely heavily on implementation and enforcement. First, citizens and savings. Currently, too few European citizens make a decent return on their hard-earned savings, at least not in a simple and cost-efficient way. In Europe, we have over 10 trillion euro sitting in low-yield deposit accounts. There are good reasons for keeping money in safe bank accounts, but there are also missed opportunities. Lacking efficient capital markets in Europe, those who are motivated enough to find a way to invest their money often turn to foreign markets, and too often it is easier to do that than to invest in our single market. This is regrettable and represents a loss to us all. It also means that businesses in Europe have less European financing options. On the other hand, much of the returns made in Europe's stock market often benefit pension funds from third countries and only marginally local pension funds or retail investors. This is another missed opportunity. We will take action to make investing in the EU easier and more beneficial for our citizens. To achieve this, we will put forward a European blueprint for savings and investments accounts for retail investors based on existing national best practices, accompanied by recommendations on the tax treatment for such accounts. We will also present a financial literacy strategy to empower citizens, raise awareness and increase their participation in capital markets. We will also work in the area of supplementary pensions, whilst fully respecting Member States' competence to devise multi-pillar pension systems and the social dialogues. We will put forward recommendations to promote auto-enrollment in occupational pension systems, pension tracking systems and dashboards, which have proven to be effective in raising awareness and attracting more people into supplementary pension funds and other retirement products. We will also review the current EU supplementary pension framework, namely the regulation on the Pan-European Personal Pension Product, PEP, and the EURP directive to increase its effectiveness and attractiveness. Second, investment and financing. Too often, European companies, in particular young, innovative ones, have to look elsewhere for funding, and indeed, many of them choose to take their business outside Europe. One of the key objectives of the Savings and Investments Union is to increase and facilitate access to finance for EU companies wherever they are located in the single market. By making it easier for companies to access diversified sources of finance, including cross-border in the EU, they can raise the funds they need to grow and create jobs here in Europe. For this, we will look at multiple ways of improving the availability of capital, in particular through institutional investors. We will address barriers for insurers, banks and pension funds to invest in equity, including in venture capital. We will review the EU rules on securitization, focusing on due diligence, transparency and prudential requirements for banks and insurers, as this will free up resources from banks and allow to better support companies. We will leverage on public funding through the EIB Group and national promotional banks to attract private investors into co-financing projects that support our economy and implement our political priorities. We will also revise the legislation on European venture capital funds. This will help to better facilitate equity financing for our high-tech and innovative companies. Third element, integration and scale. We have to promote operational efficiency in our markets. European firms are unable to enjoy the scale and synergies of the single market. This is costly and represents a competitive disadvantage for the EU. Fragmentation persists despite the existence of passports and advanced harmonization of the regulatory framework. This situation benefits certain actors, and we cannot stand for this. I intend to be vocal in calling out those who stall our joint progress and hold back European capital market integration. Furthermore, we will present ambitious legislative proposals to remove regulatory and supervisory barriers to cross-border operations of market infrastructures, asset management and distribution of funds. This will enable financial market participants to grow efficiently across the EU and to lower costs of financial services for both businesses and citizens. And finally, an efficient supervision in a single market. We need strong and harmonised supervision to ensure the strength, stability and integrity of EU capital markets. It's crucial to ensure all financial market participants can count on equal treatment and broadly similar decisions when approaching supervisors, irrespective of where they are located in the EU. Convergence is a tool that has shown its merits, but also its limits. Tolerating duplications, divergences or supervisory inefficiencies adds even more to the cost of investing in the EU and erodes stakeholders' trust. It is our responsibility to act. The Commission will present a legislative proposal to achieve a more unified supervision of EU capital markets. This will include measures to strengthen convergence tools, but also will envisage transferring certain supervisory tasks from national to EU supervisors. On the banking sector, which is also part of the SIU, the Savings and Investments Union takes an holistic approach, encompasses the entire EU financial system. Europe's capital and banking markets are deeply connected. Strong capital markets need a strong banking sector. Banks are not just intermediaries. They are crucial players in the Savings and Investments Union. They provide finance, manage risk and support European businesses. And yet, Europe's banking framework remains incomplete and our banking market fragmented. And that's a problem we must address. The banking union contributes not only to financial stability, but also to better integration of the banking sector. We need large and diversified banks at the scale of the EU economy, not just at the national scale. We need them to compete at global level. The development of the Capital Markets Union, which is part of the Savings and Investments Union, must be supported by a competitive banking sector with pan-European actors. That's why it's paramount to continue working on the reform of the bank crisis management and deposit insurance framework, as well as on the development of a European deposit insurance scheme, or EDIS. The Commission will also deliver a report on the state of the banking sector, including its competitiveness, in the course of 2026, whilst closely monitoring developments in the global market. We will continue to work to preserve a level playing field while preserving as well financial stability. On the need to engage everyone, we have conducted extensive consultations throughout Europe. My services have brought the views of 27 member states into the Savings and Investments Union. And an effective single market for capital does depend on thriving local markets. Both need to develop in tandem. Member states have confirmed that they share the objectives of the Savings and Investments Union, and we will need their commitment to act, especially in areas where the EU has limited competencies. Again, delivering is a shared responsibility. The Commission has put the strategy forward. We will now deliver on our end and engage with co-legislators to translate all this into action and results. Thank you very much.